Hello and welcome to Market in a Minute, May the 23rd, 2025. It's been 10 days now, 2 trading weeks, since a confluence of factors, war premium, IMF approval, interest rate cut, progress in secular debt, etc., combined to deliver the largest opening gap up in the KSE 100's history. Yet the market seems to have stalled since then. Bulls have been trying to make a dash at the April 4th high, while bears are trying to bring it back to one of the moving averages it is so far away from. But has it really stalled? Often in technical analysis, we found that markets that appear listless offer, in fact, a ton of information, especially if you apply the many oscillators and indicators that we know of. So let's put some of them to work and let's see what the market has been telling us all this week and the week prior to this to put in perspective what to expect in the week that is to come. Let's see. So here's that gap we were talking about. It was 10 trading days ago, which means 2 weeks. But since then, the bulls have been trying to break above this April 4th high, while the bears have been trying to drag the index down to at least one of these moving averages. But neither has been happening. But as we said, even though there's no ease of movement in either direction, as such tight ranges are so often described by technical analysts, there's still a lot of information in this chart. We'll go right back to the RSI chart, which we've been monitoring for most of the past 2 weeks. And no matter how many times the market makes an intraday high, like it did yesterday also, we are not going to be convinced of it here till this level is breached. And since this level is not being breached right now, we've come to the conclusion that at least for now, till the conclusion of this week, the bulls did not have the momentum to break above the April 4th high. So if the market is stalled, and if the market does come down for a breather, we pointed out 3 facts that might happen in collusion. Number 1, the RSI might drop to 40. Number 2, the market might drop to fill this gap. And number 3, the stall might happen in the time the budget is being announced. That might give a final touch to the sort of reaccumulation that some of our colleagues in technical analysis have been pretty rightly pointing at. But for now, if you'll notice that both volume and volatility are down, the market is calming down, it's formed a complete doji. If you look at the hourly chart today, the shaded zone being the first hour, you'll see the market barely moved out of the first hour's trading zone. A little to the upside, but look how it came down and then stayed here. So the market it ended pretty much where it started. But the important thing in the hourly chart is a contradiction, an inherent divergence with the daily chart. Over here, you'll see that the RSI has bounced off of the 40 level, and it did not exactly turn back at the 60 level. So the RSI in the hourly chart gives more momentum building than it does in the daily chart, which is good news for bulls expecting another move up to the top, this being the daily chart. So this is one thing we'll be keeping an eye on. We've also been monitoring the bellwether stock OGDC for the past couple of weeks and how closely its performance has mirrored the index's performance. Only over here, it has come right back to the 50-day exponential moving average and found very solid support over here, even though the RSI is below 60. So there's a tug of war between the bulls and the bears in both the bellwether stock and the index. And with a lot of positivity expected to come to the market right around the time of the budget, at least that's the rumor so far, building on the good news from the last 2 weeks, which has not yet resulted in a substantial break to the upside, there is still reason to believe that some sort of momentum is building in the market. It's not showing right now, it's showing on the smallish charts, it's beginning to show in the bellwether stock, but it's not taking hold right now. For now, we are not convinced of a breakout above the April 4th high because of the momentum of the market which is lacking. But if it keeps up, builds up, and if this turns around 40, or even if it turns up right now, we will be very willing believers in an upturn and a bull run returning to the market. Till then, is what we've been doing for the past 2 weeks is keeping a very close eye on the market, especially now that the market has formed a doji, which means complete indecision, and the bellwether stock is now coiling into a sort of a triangle. So let's keep our eye on the indicators and the oscillators and the index, of course, and see which way next week takes us. Thank you.